Good morning everybody, and this is your DAX technical analysis for today. So, nice decent pin bar on the daily that was formed. Only concern I've got with that pin bar is that we're just underneath this level, and that level is 15,818. Oscillators have crossed over and are starting to point to the downside. As soon as both of them cross over the 80, normally you get a pretty strong move to the downside. Just looking at the S&P market, the options expiry is today, but there's not really many puts in the market at the moment. There's more bulls are in the market, and the highest volume of the open interest in the bulls. So I expect the US markets are more than likely going to a pretty big range. They've got to a bit sideways, but I think more sideways to up than sideways to down. Well, at least until the options close out, that is. So what's going to happen is the DAX is obviously going to follow suit. So what we do have here is a pretty strong trend. We broke through the structure, and the structure, when you look at it, is basically a 3, almost 4 month range, and we broke to the upside. We've come back. We haven't really tested it decently, but we have come back into the range, and then the buyer stepped back in. So if we start looking at the levels that we need to pay attention to, there's a couple of very interesting setups at the moment. So the first one is a bearish view. So you can see range, gap down, bolt to the bottom, and come back. Now, did we close that gap down there? No, we didn't. You see that gap there? We did not close the gap. We made an attempt at it. So that is 15,570. We've broken through all the moving averages, come back to test the 66. They're still in a bullish pattern. In other words, a bearish crossover hasn't happened. Only difference is that they're starting to consolidate and sort of gently rolling over. So that is just a warning sign. So strong move down, bit of a pullback. Logically, you would expect another move to the downside. But then the converse is true on the daily. Move down, buyers have stepped in, seen value at this level, and haven't sold. They've just kept driving it up. So with all of that noise in your mind, you look at the hourly, and the hourly starts supporting the view that you're going to have another move to the downside, which wouldn't surprise me. We do have a gap open, and you can see there it is there. We made a valiant attempt to get to it, and I just want to see if we touched the... No, we didn't even touch the gap candle, which is this one here. You see that tail? Normally what happens is, and you can see it happened here, price runs away, comes back, touches the gap tail. The buyer step in is trying to ambush those of us that are looking for gap close, and then it moves up. And then the gap close normally happens some other time. So that happens more often than actually straight down to close gap. So just bear that in mind. So at the moment, we did not touch 15,613, which is the gap candle, and we did not touch 15,570, which is the gap. So there's a lot of bearish magnetic pull to the downside at the moment. And if you're looking at the crossover of all these moving averages, and also a retest of this area right here at 15,818, I would anticipate another move to the downside. So that's kind of the view I've got. Now, if I'm going to take that today, which I probably won't, I think I'm rather just sit on hands, because with options expiry day, it's normally pretty volatile. So you can see two things on the cards. First, there's a gap to the upside. So you've got magnetic pull to the upside, you've got magnetic pull to the downside. Oscillators at the moment are all over the place on the 15-minute. So we haven't got a crossover. So I would anticipate if we break above 15,818, we'll probably close the top gap, come back, find support down here, and that's going to give you an opportunity to buy into it, drive into sort of go test those new highs again. If we reject 15,818, then I would anticipate us moving to the downside here at 15,613 and possibly getting down to 15,570. But this is the level I'd pay attention to, 15,613. So in other words, a big range in between these two levels. That's kind of the view I've got. If we do break to the upside, it's a relatively nice setup, but I don't think I'll be chasing the gap. It's risk to reward is just not worth it, because your stop's got to be below the swing low. So if you do this, your stop is 78 points and you're looking for roughly 56 points. It's not even a trade worth taking unless you're scalping. So for me, just sit quietly and wait what happens with the options market. I think I'll probably move the US market once options expiry is over. And we'll pick up the DAX next week, see if this can find some stability somewhere in one of these levels, and we'll take it from there. So yeah, been a bit of a meltdown, but we've been waiting for some kind of a meltdown just to get a reset. I'm not entirely convinced that that's the last of it. There is quite a bit of bearish sort of setups at the moment on the higher time frame. So yeah, but it's against the trend, so I'd rather just sit quietly and keep my money in my pocket for now. We'll pick this up next week. I think that's going to be the easiest thing to do. Once the volatility's gone up, sort of stabilized, then we can start looking for opportunities again. Anyway, that's it for me. Hope it helps, and we'll catch up with you on Monday morning. Enjoy the weekend, and cheers for now.